All right, so we've got an interesting investment dilemma on our plate today. Our listener is eyeing up two retail giants, Walmart and Costco, and trying to figure out which one's the smarter buy right now.
Yeah, it's a classic showdown.
Totally. And to help us unpack this, we're diving deep into a Motley Fool article that our listener sent over. And let me tell you, there are some pretty juicy tidbits in here.
Oh, I bet. What kind of stuff are we talking about?
Well, for starters, did you know that Costco just raised its membership fees for the first time in 7 years?
That's a bold move, but it definitely says something about their confidence in their customer base.
Absolutely. But before we get ahead of ourselves, let's take a step back and look at the overall performance of these two companies.
Good point. We need that big picture context.
Exactly. So the article points out that both Walmart and Costco have actually outperformed the S&P 500 over the past 3 years.
Pretty impressive, right?
That's definitely noteworthy. But as any savvy investor knows, past performance isn't always a guarantee of future success. Exactly. So how do we figure out which one has the stronger potential moving forward?
Well, we need to dig deeper into their strategies, their strengths, and their growth prospects.
Okay, let's start with Walmart. What are some of their key advantages in this retail landscape?
Well, one of their biggest strengths is their sheer size and scale. They move massive volumes of goods, which gives them incredible leverage to negotiate lower prices from suppliers. And they've been really smart about using their physical stores as mini fulfillment centers for online orders.
So they're turning those stores into a secret weapon against Amazon.
Precisely. It not only helps them compete on price, but also cuts down on shipping costs and delivery times. They're playing the e-commerce game strategically. And here's something that might surprise you. Even with their booming online business, a whopping 80% of Walmart's revenue still comes from their U.S. stores, including Sam's Club.
Wow, that's a lot of people walking through those doors. Okay, so Walmart's got the scale and logistics down pat. Yeah. But what about Costco? What's their secret sauce?
Well, Costco's model is all about what we call stickiness. They want to make it hard for you to shop anywhere else.
I get it. Like once you're a Costco member, you're hooked.
Exactly. And they achieve this through their membership model, which gives customers access to those legendary bulk discounts.
That's like a treasure hunt every time you walk into a Costco. Plus, they're always adding new and exciting products to their lineup.
Right. But it's not just about the thrill of the find. That membership model also creates a sense of community and exclusivity. Costco members tend to be fiercely loyal, even when those membership fees go up, and that translates into predictable recurring revenue for the company.
So even though they're raising prices, they're betting that people will stick around for the long haul.
That's the bet, and it seems to be paying off. Costco's growth strategy centers around attracting new members, keeping those renewal rates sky high, and expanding globally. They're not just sitting back and coasting.
They're playing the long game. All right, so both companies seem to have solid strategies in place. But let's talk numbers for a second. How has their actual growth compared in recent years?
Well, both companies saw a significant bump in revenue during the pandemic as people stocked up on essentials. Walmart's revenue jumped by 7% in fiscal year 2021. But then growth slowed down to 2% in 2022 as things started to return to a new normal. However, they bounced back with 7% growth in 2023 and another 6% in 2024.
It sounds like their diversification with a mix of physical stores, e-commerce, and different product categories is really helping them weather the storms.
Absolutely. They're not putting all their eggs in one basket. And they're actively competing with Amazon by matching prices, improving their online shopping experience, and even offering their own subscription service, Walmart Plus Drax.
They're not backing down from the challenge. So how does Costco's growth story compare? Did they also experience a pandemic bump?
Oh, absolutely. Costco also saw a surge with a remarkable 17% revenue increase in fiscal 2021, followed by another 16% in 2022.
Wow, that's impressive.
Right. But like Walmart, their growth has moderated since then, coming in at 7% in 2023 and 5% in 2024.
So a bit of a slowdown, but still pretty healthy growth overall. What would you say is driving those numbers for Costco? Is it just people stocking up on those giant tubs of mayonnaise?
Well, those bulk buys definitely contribute, but Costco's growth is primarily fueled by two key factors: international expansion and incredibly high membership renewal rates. In fact, during the first quarter of fiscal year 2025, they added a staggering 7% more cardholders, bringing their total to almost 139 million worldwide. And get this, their renewal rate stayed strong at 90.4%.
Wow, 90.4%. That's a serious vote of confidence from their customers. So both Walmart and Costco seem to be doing well in the growth department. But what about their financial outlook and how their stocks are valued? That's always a crucial consideration for investors.
Yeah, that's where things get a bit more complex.
How so?
Well, analysts are projecting continued revenue and earnings per share, or EPS, growth for both companies. EPS is essentially a measure of a company's profitability, and it's a key metric investors look at when evaluating a stock.
Makes sense. So what's the catch?
The catch is that both Walmart and Costco stocks are currently trading at what we call a high valuation.
Okay, so in plain English, what does that mean for someone like me who might be considering investing in one of these companies?
It basically means the stock price is relatively high compared to the company's earnings. Imagine buying a house in a super hot real estate market. You might end up paying a premium.
Ah, I see. So even though their businesses are doing well, that price tag might give some investors pause.
Precisely. And to make things even more interesting, both companies have relatively low dividend yields, which isn't ideal in a high interest rate environment.
So is it a red light, yellow light, or green light for these two retail giants?
Well, according to the Motley Fool article, there is a slight favorite in this showdown, but we'll have to dive into that after the break.
Okay, so we're back and ready to reveal the winner of this retail showdown. Which company does the Motley Fool think is the better buy right now? Walmart or Costco?
Oh, drum roll, please. The Motley Fool actually gives a slight edge to Walmart.
Walmart. Interesting. With Costco's devoted members and all that international growth, I kind of thought they might have the edge.
Yeah, it's a tough call, for sure. But the article points out that Walmart has this incredibly diverse business model, right? And they're not as reliant on memberships for their revenue. Plus, their stock is just a tad more affordable compared to Costco at the moment.
Okay, I see the logic there. But you said slightly better buy, so I'm sensing there are some caveats here.
Right. Remember those high valuations we talked about earlier?
Yeah.
That's still a factor. Both companies are trading at a premium, which, adds a layer of risk, especially given the current market conditions. It's like they're both strong runners, but they're carrying extra weight.
So not a clear-cut victory for Walmart then.
Exactly. It's important to remember that this is just one analysis, a snapshot in time. The retail landscape is constantly shifting, so new trends and challenges could emerge and change the game.
So what's the bottom line for our listener? What should they be thinking about before making any decisions?
I'd say the key takeaway is that while this analysis gives us some great food for thought, it's not the whole meal, You've got to do your research, consider your own risk tolerance, and maybe even chat with a financial advisor to get a personalized perspective.
Couldn't agree more. So while the Motley Fool leans towards Walmart, it's clear that both of these retail giants have their own unique strengths.
Yeah.
Walmart with its scale and logistics network, and Costco with its membership loyalty and treasure hunt experience.
Yeah, it's fascinating to see how they're each adapting to this ever-evolving retail world. And for investors, it's a reminder that there are always opportunities out there, but due diligence is key.
Well said. All right, as we wrap up this deep dive, I want to leave our listener with a final thought. We've talked about Walmart and Costco, but what about the big picture? The future of retail itself. Where do you see things heading?
Oh, that's a great question. I think we're going to see those lines between online and offline shopping continue to blur. Like what Walmart's doing with its store fulfillment model and how Costco's e-commerce sales are growing. It's becoming a much more integrated customer experience.
So it's not about choosing one or the other anymore. It's about having that seamless experience that blends the best of both worlds.
Exactly. And I think personalization and convenience are going to become even more crucial for retailers. They'll need to anticipate customer needs, create those curated experiences, and make the entire shopping journey as smooth as possible.
Almost like they need to read our minds, huh?
That's the holy grail. And of course, technology will be at the forefront of this evolution. Think artificial intelligence, machine learning, all those data analytics helping retailers understand their customers, predict trends, and streamline their operations.
Sounds like the future of retail is going to be a pretty exciting mix of tech and that human touch.
Precisely. And for investors, it's a dynamic landscape full of both opportunity and challenge. The companies that can adapt and innovate, those are the ones that will come out on top.
So, as we've seen with Walmart and Costco, it's all about staying ahead of the curve.
Absolutely. And for a listener, it's about staying informed, doing that research, and making investment decisions that align with their own goals and risk tolerance.
Great advice. And with that, we've reached the end of our deep dive. We hope this episode has given you a new perspective on the retail landscape and sparked some ideas for your own investment journey.
Remember, the journey is just as important as the destination. So enjoy the learning process, stay curious, and keep those investing gears turning.
Well said. Until next time on the Deep Dive, happy investing.
You know, it's really amazing to see how much retail has changed, even in just the last few years. I mean, we've gone from those traditional brick and mortar stores to the rise of online giants, and now it feels like everything is blending together. Yeah, it really shows you how these companies can adapt, right? They've had to evolve to keep up with how we're all shopping and all the new technology coming out. It's impressive how they're staying ahead of the curve.
It really is. And it makes you wonder what kind of innovations we'll see in the next 10 years, right? What's next for retail?
Well, that's the exciting part. You never know what's around the corner. But I do think we'll see technology become even more integrated. Maybe things like augmented reality in stores or personalized recommendations that use AI. And who knows, maybe even drone delivery will become the norm.
Can you imagine drones dropping off our groceries?
Yeah.
That'd be pretty wild. But, speaking of the future, there's one aspect of investing that I think we often forget about. It's the human element.
Ah, you're talking about the people behind the companies, right? The employees, the suppliers, the communities they operate in, all of that.
Exactly. It's easy to get caught up in the numbers and the charts and forget that real people are impacted by these businesses and our investment decisions.
It's a really important point. And actually, more and more investors are starting to think about these things. You know, those environmental, social, and governance factors, ESG is what they call it, they want to know that the companies they're supporting are doing business ethically and thinking about their impact.
So it's not just about profits anymore. It's about values, making sure your investments align with what you believe in.
Right. It's like investors are realizing their choices can actually make a difference in the world. They're searching for companies that are doing good and doing well, both at the same time.
It's like investing with your heart and your head, both working together.
Yeah, I like that. It's about finding that balance where financial returns and positive impact come together.
Well said. So as we wrap up this deep dive, I think the takeaway is that investing is about so much more than just picking stocks. It's about really understanding the businesses, the trends, the people, and the values behind those investments.
Couldn't agree more. And it's about being an informed investor, staying engaged, and always learning. Remember, knowledge is power when it comes to making smart decisions.
Absolutely. So to our listeners out there, thanks for joining us on this deep dive into the world of retail and investing. We hope we've given you some food for thought and maybe even inspired you to explore some new ideas.
And remember, the journey is just as important as the destination. Enjoy the process of learning and stay curious about the world of investing.
Couldn't have said it better myself. That's a wrap for this episode of The Deep Dive. Until next time, happy investing.